Now, as we head into the upcoming week and Sunday's overnight session, the larger time frame question that is in play is whether this breakout attempt is now going to result in any kind of follow through to the upside, or are sellers just going to step back in? So the market is now at a short-term inflection point where we either need buyers to step in and push the market at least up into the 54.17 to 54.35 area. So if we break out above today's high, then I would expect the S&P to expand the range into the 54.17 area quite easily, and probably at that point we'll start testing this better resistance that begins at 54.30.75 and then goes all the way up into 54.67 to 73 quarters. So then this big area could come into play if we get that bigger breakout. And on the larger time frame, what that means is that ES would be testing the bottom of the balance that we broke down from. So that's a larger time frame inflection point. And you can see that we also have the 61.8% retracement of this big swing on the daily chart at 54.17. We have the 50% retracement at 54.20 to 21 based on the swing high from the all-time high down into this swing. So there's enough going on here that I think it's going to take some time for this big area to get processed. And on first test, my expectation would be for larger time frame sellers to be active here. Now, where they step in within this big area is going to depend on the level of strength and momentum that we're seeing in real time heading into that area. And it's going to depend on how the market approaches that area. So, for example, if we get a breakout on Sunday or Monday above 53.87 and the market doesn't really respond to 54.17 and goes straight line up into 30.75 to 34.75, well, then we could get a response even over here. But if we push up, we consolidate a bit, then we push up, we consolidate again ahead of the zone, well, then ES may have to go into 43.5 to 53.5 or even 67 to 73 quarter to attract responsive sellers. So all three of these upper zones here are really part of that larger time frame and big area of resistance, and where sellers step in is going to depend on how the market approaches it, the level of momentum that we're seeing in real time, and how high the market goes will also tell us something about the state of the market. So for example, if ES has to go all the way up into 54.67 to 73 quarter to attract larger time frame sellers, then that means that the environment is now shifting. So in that case, yeah, we might get a response, but it might just be an intraday response back down towards the 31 quarter high volume node or something, and eventually we might still go higher, because a weak market doesn't have to push all the way into big resistance to attract sellers. If the market's weak, then we want to see sellers stepping in at 43.5 to 53.5 or 30.75 to 34.75. So if we get a swift rejection here, then we may have to come back down to 76 to 87, and maybe even eventually we go lower. But if they don't, then it would be a sign of strength. So how the market behaves at each of these zones also provides us information about the state of the market. And of course, in order for the bullish scenario to trigger, we will need to see ES holding above the 54.5 to 64.5 intraday bull bear zone, and then we will need to see a breakout above the 53.76 to 87 initial resistance. And until that happens, we need to be relatively neutral and open to the market moving in either direction. And in the event that larger time frame sellers step in and we don't even get a breakout, well, then on the downside, a break below 53.19.5 to 28.5 would be that bearish indication, and a breakdown below the 53.19.5 to 28.5 area could trigger a bearish move back down towards initial support 52.82 quarter to 88 quarter, and possibly even lower. So if we look at just the the 1 day balance, we can see that the 100% range extension can quite easily take us down into Thursday's RTH low. So that's something we will be keeping an eye out for as we head into Sunday and Monday.